Tuesday, December 6th, market analysis with Stan Ehrlich. Good morning. Currently 10:43 California time. So we've got a couple of hours and a half almost of time left. I start out with the S&P 500, the Spider SPY, with my analysis every morning to give you an overview of what I think the stock market indexes are going to do as a whole. DIA was going to get a little stronger sometimes, relatively speaking, to the Spider, and the QQQ may get a little weaker, or vice versa. Depends upon the economy, the situation, the trends, and so on and so forth. These days, the S&P has been a little weaker than the Dow Jones, but significantly stronger than the Qs, so it's in the middle of the two. The Qs could make a new low for the year more easily because it's closer at the moment, while the DIA is further away, but the trend for the time frames we're talking about will be the same, almost always. Now, last Thursday was critical, and I said so at the time. Please listen to the recording December 1st, last Thursday. I talked about the major bear trend line being challenged, the resistance levels, old gaps being closed, and we were almost in overbought conditions. There were other reasons as well, not going to go into. Those are the four major ones. Hit it, stopped rallying, smack dab during that recording, essentially. Went down a little bit on the close that day, last Thursday, December 1st. Opened a lot lower, but came up to close only a little bit lower on Friday of last week. To yesterday, Monday, December 5th, we had a significant down day, and it broke the lows of the last couple of previous days, Thursday and Friday of the previous week, and dropped into the trading range that we now have for about 3.5 weeks. Today, now, right now, we are at the bottom of that trading range for the last 3.5 weeks, which started essentially on November 11th. The lowest low is lower than the low we just saw about a half an hour ago, but that sticks out like a sore thumb, and it's not really part of the range of the last 3.5 weeks. So that lowest low, which was 390.14, let's call it 390, is critically important. It is also in an area of support. So today's low, we just saw less than half an hour ago, probably, is support and the bottom of the trading range. And that has to hold unless we're going to start a waterfall or bigger moves down 2 or 3 days in a row, maybe through the end of the week, every day down, a substantial decline. If, again, the low we saw so far this morning, which is a low of 392.62, if that doesn't hold, I do think this thing could start to fall apart a lot more faster, a lot more quickly, a lot more significantly, even though there are support areas underneath, which I do expect it to bounce off of, but I don't have much faith. Maybe little bounces, maybe for a day, maybe for several hours. But if we do close below what we have as a low so far, that's going to trigger off more longer-term selling, in my opinion. So, as I've said, I'm still bearish long-term. I'm looking for a move down probably in the 340s to challenge the low on October 13th, which was, as you might remember if you've seen some of my videos, forecasted 2 months in advance. During the month of October, I said you have a very high likelihood of turning around and starting to rally. I was hoping for a ER signal, a bullish engulfing, which I got. On October 13th, we have a green bullish engulfing. It's great. It's exactly what I would have hoped for Christmas. or Thanksgiving for that matter. So it worked. We went right back up to last Thursday's high. Again, 410 exactly. Stopped the rally last Thursday, and we are already down to 93, 17 approximate points below that in 3 days. Friday, Monday, and Tuesday. Today's Tuesday, and it's not over yet. I suppose on a very short-term basis, we could rest a little bit. After all, we did test some support. I don't have much faith in this. I do think we're going to see this market drop off, and a lot and very quickly, but we have a first chance of a bounce where we just started from a half an hour ago. RSI did get down to 40 on the daily RSI. That's not oversold, but it is getting closer to the 30 level. And you know I love 25 or lower for being officially oversold. So what are we doing with the DIA? It has also made new lows, as you might expect, for a couple of weeks, not quite the full 3.5 weeks. That's a little bit lower. I just got saying a few minutes ago that it's been stronger. And look at the size of this rally, which actually last Thursday made new highs since what? Going back to April 21 or 20-ish and closed an old ancient gap from back then, and now is coming down. So no change of opinion here. It even broke its major bear trend line, which the S&P did not do. It's got gaps to close at lower levels and quite a bit lower in some cases. So Tierra del Fuego, looking for south, looking for more of a break. And what about the QQQs? They did not get up to their major bear trend line. It came close. The S&P touched it almost exactly, and the DIA went way above it. But everything is turning down now for various reasons. And we are almost in new low ground, completely new lows, not just new low closes or most of the lows, but total new lows for 3.5 weeks for the QQQ. So it's close. And it's not that far away from new lows since the beginning of the year for the whole bear market, which essentially started on January 4th. And of course, November 22nd, we got a bear signal in the QQQ. I've got to remind you of that. It is and was the top of the bull market since the COVID crash and the beginning day of this bear market all of 2022. And if you go back and look at the daily data charts on this DIA, we hit the high day to the exact date. I think January 4th, I believe. And I guess I got to show you that real quick. And here is the daily data chart. And there is the high, January 5, yeah. Red, bearish engulfing after an overbought condition, after an upside exhaustion gap. There were plenty of technical signals, profound ones, that said, watch out, this thing's about to turn down. But nothing necessarily that would tell you that it's going to start a 1-year bear market. Nevertheless, the ER signals picked that day is the beginning of a move down. Let's go back to the QQQ and daily data. And maybe today we're still going to see it drop enough to break into new lows for the last 3.5 weeks for the Qs. That would happen first, then the S&P, then the DIA probably, if we kept getting weaker and weaker and weaker before the end of the day. All right, I want to include some futures today. Here's my futures charts. Now, these are all perpetual or continuation contracts. They mean the same thing. And I'll start with the wheat again. Remember, we caught the war rally on the wheat market. We have a high day bearish sell signal. Fantastic. You can't get better than getting a sell signal on the top of the market, the high day. Vice versa, you can't get better than buying October 13th on the low day so far on the stock market indexes. And yes, our ER system is 100% automated. ER1, that's the name of one of two different systems, ER3 and ER1. ER1 gets in the same day of the signal. ER3 gets in within 3 days after the actual green or red signal day if we get a good enough retracement. So I don't miss a signal. ER1 never misses. ER3 might, but it also has a little bit more conservative approach. Smaller losses and larger profits, typically speaking. Wheat, got the top, oversold at the moment. Next chart. Sold a rally high a month ago. Cocoa, looking for lower levels, just starting to come out of overbought. Bear trend. Next. 10-year notes, very significant here. Obviously, the stock market overall and many other markets are paying attention to interest rates a lot lately. Had a head and shoulder bottom. It was lopsided. Neckline was very, very good. Breaking the neckline right there. Our minimum upside objective was fulfilled almost to the exact tick, which you don't see very often. But that's it. That's my minimum upside objective of 115, and I have been saying that for weeks. Not every day, but usually. Now what happens next? Well, looks like this thing could slip back down some. Got a little overbought. I'm looking for a downside correction. I can't necessarily predict it's going to see new lows, but I do think it's going to slip significantly and probably down into the 110, 111. Yeah, ballpark. And take a week or two to do it. Next chart. Bonds, 30-year long bond, same lopsided head and shoulder bottom as you might expect, or you could call it a double bottom if you like that. The upside objective was fulfilled if you call it a head and shoulder, also fulfilled if you call it a double bottom, doesn't matter. Plus, the high of the rally a couple days ago was smack dab at a resistance point, perfectly. And that would be, of course, the low, which, of course, is an ER buy signal on June 16th. The low for months and months prior and for a few months afterwards. Next chart. We caught the low here on coffee a week or so ago. The trend is down, and I'm not sure whether that's going to really change the trend yet. So I'm turning neutral. I've got my rally. It lasted a week or two. Next chart. No good signals here recently. Got the top in platinum for months prior and months since, and that's since March. That was the high since March. Next chart. We got the top of this market for the last whole year in copper, and an excellent buy signal here on September 28th. Neutral for the moment, got a little overbought, starting to slip back slightly. Nah, no real major comment here that I feel comfortable with. Next. Oversold, gap down. You're going to rally back up to 6.211-ish. Close the gap, hit resistance, and then turn back down again. And that little rally up to that level I just mentioned is going to start in a day or two, real soon. That was natural gas. New lows for many months. Next. Soybean oil dropped like a rock, oversold for the third day in a row now, in the support area, probably going to turn back up any day real quick and have a rally to a minimum of 65. Might even get up to 68-ish. This is no place to go short. You should be watching to get out of shorts and or potentially go long. Next chart. Same comment. Oversold for 3 days. Corn at the beginning, not quite, but a little bit lower. Support. If we bounce, and I certainly expect that real soon, we're going to hit resistance on a bounce, and that's the best I can say short term. Sideways trading range for soybeans. Boy, boring soybeans for the moment. Nothing happening there. No trend even. Sugar. Got a good sell signal a couple of weeks ago. Didn't do a heck of a lot. Looking for somewhat lower. Nothing major here. OJ, neutral, forming a pennant formation. Nothing going on of much consequence. Next, oversold in the heating oil. New lows for a couple of months, but I expect a rally because of oversold condition. And major support is still somewhat lower, so we got a little bit lower to go to catch that. All right, next. Live cattle, big down day. Major historical resistance stopped the rally over the last couple of months and a double top over the last couple of months. This looks like it's going to break below 153, probably get back down to our last huge buy signal that was really great on September 29th. And cattle could get down to say 150, 148-ish. Currently 153 and a half. Next. The E-mini, of course, is a futures contract, but it's also a stock market index. And of course, October 13th, we caught the bottom. Probably the most popular futures contract traded is the E-mini, the electronic miniature stock market index. That's why they call it E-mini. It's the first one that was started to trade, I think, in the late 1990s. I remember not the exact date, but I've been at this since 1971. A long time. Not too much to say here at the moment, except that I'm obviously looking for those trend lines on the spider, which would be approximately the same for the E-mini. I don't have the lines drawn in or anything else on the futures chart at the moment. I'm looking for lower levels, just like the spider, of course. Next chart. Crude light, new lows. Looking for lower levels. Not oversold at the moment, but very close. But I think it could drop off to 70 or even below in the next day or two, and then get oversold, and then have another bounce. Next, gold. Hey, bearish signal yesterday, told you so. Right now it's around unchanged, but the rally high is right up there where we would get short for the ER3 new short. Remember, ER1 is short the moment the bearish engulfing evolves, and it has to have been overbought, which it was for 2 days earlier, in order to get the red price bar, which is my signal. All custom code, ER signals. Next. So I'm bearish on gold. What can I say? Sell signal. And guess what? Silver, also a bearish engulfing for the exact same reasons, of course. Overbought, bearish engulfing, price range, bingo, on the way down, already lower than yesterday's close, looking for lower levels. I don't think the support level is really going to hold very well, but it is pretty significant, around 21.2. We'll see what happens when we get there. Next, Miss Piggy, hogs. 4 days ago, got a buy signal, had a heck of a big rally the next day, and the next day up more, and yesterday a little bit more, and today we're coming back down for a correction. Pick the low last week. Next, soybean meal, overbought, new high ground, too much, too fast, looking for a short-term top. But this is bullish longer term, but I wouldn't be buying it now, not today, not in an overbought condition. Is if it slips back to 440, maybe a little lower, 440, 437, 435. That could be a pretty good area to be a buyer. Next. And we started with wheat. I'm going to end with wheat. I'm not going to go into the forex or the sector section for today. We'll leave it at that. Thank you very much, Stan Ehrlich. Have a great trading day. And Merry Christmas. And we'll talk about the Santa Claus rally later also.